So we'll start with Greg. What are your opinions on the metals market right now? In particular, let's talk about golds first.
So gold's had a very solid week or solid couple of weeks, and it's caught many off guard with the strong move in the dollar. We've seen gold continue to push higher, and I'm expecting further upside. We've seen gold being one of the worst performing assets over the last sort of 6-7 months. In fact, I go back to August last year where gold topped out. We've sort of been in a sideways consolidation pattern ever since. So it's about time gold caught up, and we are starting to see money flow into gold, and I am looking higher for gold as we move into the end of the year.
Nice. And is that the same for other precious metals?
So silver as well has been performing really well. The only thing I'll say about silver is that it did hit my ideal zone on the upside. So I am looking for a small pullback before we resume higher. So I think we could see weakness in the coming weeks, but I do believe that to be a buying opportunity.
Okay, so crypto markets, like these days, like I even just look on your face, like we talk forever about crypto. It seems like it is the big boom right now. What are a couple of pressure points for cryptos, things that people are considering? Maybe like, I don't know, would people be investing in Bitcoin right now? Should they be, or is it definitely a kind of a riskier market to get in right now? Are we getting to the top?
I think we're in the final phases, but you often see the biggest moves in the final phase. So I'm incredibly bullish on the crypto market.
Yeah.
We are seeing a pullback today, which is not surprising. You asked me what's the biggest concern for crypto, and it's probably complacency. We're seeing huge over-leveraged positions entering the market. We're seeing a lot of uninformed investors who sort of getting in late on the show. And we saw a liquidation event today, which is not unsurprising. So we're currently around the 62,000 level. I wouldn't be surprised to see this bottom out in the $55,000 to $59,000 region. And yeah, I'm looking much higher from there. I think we could even see the 100,000 level reached, but it's high risk. Of course it's high risk, and it's a market. It doesn't mean I'll be right. I can feasibly head lower, but I am looking higher.
Yeah, complacency, that is an interesting one. We've had a couple of the guests on the interview talk about new participants in the markets, particularly new traders that are learning how to trade. What's your opinion on brand new, quote unquote, newbies to the markets? Is that a good thing? Is it a bad thing? We'll see.
It's what you expect. It's what you get at the late end of the cycles. Unfortunately, it's the high, or fortunately, I suppose, for us traders, it's the hype phase, the mania phase. And it's important to differentiate that between a market topping out. You know, what we have seen is a lot of money come in. You know, my phone, I get 5-6 messages a day right now asking me my view on cryptos, on this, on that. And a lot of the charts that I've been asked to review are just hype charts which have, you know, after the market's pumped 60-70%, people want to buy because that's when they get excited about it. So unfortunately, there'll be some losers in this. You know, when this sort of bullish phase does top out, we are going to see significant downside moves, and we are going to see bear market set in. And that's unfortunately what you get with these markets. But that's what drives the mania phase. So I'm under no illusions it's not going to continue forever. We have seen some great moves within many of the altcoin markets. So my expectation is for a further leg upside, but it's one of those that you'd rather get out early than get caught in it at the end.
With these new people in the market, with this new influx of money, has that changed the way that you are trading? Or traditionally has it kind of stayed the same?
I mean, I'm definitely not going to change the way I trade with other market participants. It's well known, I'm a technical analyst. I use Elliott Waves as my main form of technical analysis. And again, what is Elliott Wave? It's based on sentiment in the market, and it's certainly not going to change. You know, I can see when sentiment turns really hot, really bullish, and we're in that phase right now. So this pullback that we've seen today is very healthy for the market. I think it's going to wipe out a lot of the leverage longs. It's going to get the people who are certain the market's going higher to rethink. And hopefully we do start the next leg higher with participants not in the market and being forced to chase, which is often what the market needs to reset and to really move in the other direction.
With these new kind of participants, what would you say is maybe not the ideal learning method, but what would be a couple of good first steps for newer participants in the market?
I think the first thing to acknowledge is that you're not going to become a millionaire overnight. Unfortunately, new traders tend to take way too much risk on. They've got no risk management, and they just sort of look at how much they can make as opposed to how much they can lose. So the first thing is to manage risk, which is what any trader will tell you. Without managing risk, you're just never going to make it in this game. And the other is to have a strategy. A strategy is not, my friend called me to buy this stock or this coin because it's going higher. You need to have a set strategy, you need to have a plan, and you need to make sure that you execute your plan. So I would strip it back. I would start off with having a look at what I'm trying to achieve, what my strategy is my strategy proven? And after that, when I'm entering the trades, I would make sure that I've got set execution points, that I know what I'm doing, as opposed to just buying and hoping that the market goes in my favor, because you'll learn a lesson very quickly.
We had a discussion earlier in the office, just kind of came out of nowhere, and definitely struck a chord. Gold and the dollar. Are a lot of people saying it is inversely correlated or it isn't inversely correlated?
So there's a common theme amongst investors, traders, market participants, that gold and the dollar are inversely correlated, meaning that if the US dollar is going higher, gold should be going lower, and vice versa. Now, this to me is one of the most common fallacies in the market. And I think a lot of it is born out of the fact that it's lazy journalism that drives such thoughts. If gold does go down and the dollar does head higher, you be sure to read an article, the headline saying gold down due to stronger dollar. When gold does happen to go higher with the US dollar, it's either a risk-off event, gold's a safe haven, which it's not, but you'll get it's a risk-off event, or you just won't see anything being reported. So it gets to that thought process where people assume that the dollar and gold are inversely correlated. But if you go back in history, I'm not going to go way back, but let's just go to the 2015 rally where gold came off its lows, gold rallied with the dollar. 2016, off the lows, gold rallied with the dollar. 2020, off the corona lows, gold rallied inversely to the dollar. And you can go through times, and I bet you gold rallying aggressively with the dollar would account for at least half the times. What I will give, and I suppose perhaps where this does have some merit, is when gold is sort of trendless and sort of trading in a range, you do tend to see gold drifting with inversely to the dollar. But when gold is in its bullish phase or gold in a bearish phase and making a move, it does not care what the dollar is doing. And that's proven by some of the biggest rallies that we have seen. So unfortunately, a lot of investors believe this. And I've seen this week with gold rallying with the dollar again, as the euro's been absolutely smashed and the dollar index is pressing highs and gold just continued higher. People asking me, how can gold move because the dollar's going high? What's driving it? And it's just one of those things. If you actually look through time, you would actually see that gold often rallies with the dollar. And I actually want to take that a step forward as well. I've heard gold's a great hedge against inflation. That's another thing touted for gold. Well, inflation spiked its head this year. We've seen strong surge. We've seen all commodity prices, or most commodity prices hit highs, steel, copper, to name a few, cotton. And if you look at gold, it's been one of the worst performing assets this year. Yes, it started to get moving in recent times, but gold's still one of the worst performing assets this year. You've got stock markets at highs, cryptos at highs, most commodities at highs, and gold's done nothing this year, yet inflation's been high. So why are we not saying that gold is actually the worst hedge against inflation this year? But I have no doubt that should gold start to rally, which is my expectation, to push higher now, we're going to read articles saying gold up due to higher inflation, which is just absolutely ludicrous.
All right.
Okay, so still on the crypto kind of discussions, a couple of cryptos to look out for. Anything piquing your interest? Anything on the horizon? I know there's discussions in the office, but anything worth dropping a hints on?
Look, with the altcoin market, there's great potential reward, but for that reward, there is significant risk. I prefer not to go into the ins and outs on the altcoins, but what I will say, the two majors, Bitcoin and Ethereum, I'd say Bitcoin's around the 62,000 level now. I think that 58,000 level is likely to hold, and I am looking for up towards the $100,000 level. Perhaps even late this year would not surprise me. Ethereum, I am also looking higher, and I think we could even reach as high as $10,000. That's my sort of level for this bullish phase. But again, like I said, these are just targets. This is not advice, or this is not Bitcoin or Ethereum are going to these levels. It's just levels where I've been looking for some time for this current rally phase to reach before we go back into a bear market again.
Nice. With the mentor room, what's the vibe these days? Is it going a lot towards more advice targeted towards crypto, where there is kind of quite a lot of gains to be made, or is it still the kind of traditional assets like the metals and the currencies?
So we have a bit of everything. I mean, we've got members who focus on different areas. I did make a mention a couple months ago, just as the crypto market was heating up, that I'm going to be spending a bit more time there because I do see great opportunities and potential. So I have been spending more time on the cryptos over the last sort of month or two period. But again, we cover the whole spectrum. I do daily updates on gold, silver, and the S&P. Those are the three main markets that I focus on. And then we provide information, research on everything across the board, from the forex markets to oil to the crypto market. We literally cover it all.
So, Greg, we've had and we keep getting a lot of good feedback about the mentor room on our Discord. I'm sure you get them personal messages as well. What is it about the mentor room that is different and that kind of sets your lessons apart from the traditional things you might see around the internet?
So my room is very unique in the sense that it combines the analysis side with the learning side. So I don't only provide analysis, trade setups, but I also teach members to trade using the methodology that I use. So it's kind of twofold, where most rooms would either be just the learning side or just the analysis side. So I really do combine the two, and I'm very active in the room. I'm always helping members to improve, to reach higher levels. And fortunately, many members have done so, and we are seeing many profitable traders in the room, which is always great to see. I must be honest, the analysis hasn't been too bad recently.
Nice.
We caught the lows in metals. We caught a lot of these crypto coins before they pushed higher. The Bitcoin move, the S&P. So we've really had a great period from the analysis side, but it's also great to see the members, producing the work. It's not I'm producing all the work. I'm seeing some of the members count on their charts, and it's just brilliant to see how far they've come, and some in such short spaces of time. So I think it's the niche aspect of having analysis, having trade setups, but also having the ability to learn for yourself how to do it.
Okay, so Greg, a lot of people they're thinking the stock market and the market will top out at some point quite soon. What are your views on that?
Well, I think the same people have been calling for a top in the stock market for the last year or two. I'm still incredibly bullish the stock market. I think we've still got higher to go. Yes, I understand that economically it probably doesn't make sense from a fundamental perspective, but we've still got legs to go. This market's been incredibly well bid up. Pullbacks have been very shallow, and I still think the S&P has a date with that 4,800 to 5,000 in the near future, and I wouldn't be surprised to see this even reach as high as the 6,000 before we get a potential top in the market. I'm under no illusions that the market's going to keep going up forever. I do believe that this is the final push higher, Whether it will last another year or 2 years, I do not know with regards to timing, but I still am expecting higher in the near term.
The differences between somebody who's taking trading seriously, aka a pro trader, and somebody who's a novice, maybe characteristics of a pro trader versus typical characteristics of somebody who's new to the game or kind of a novice one.
So I think the main characteristic that stands out is risk management. You know, a novice or a new trader would place a trade and look at how much money they can make from the trade, where a professional looks at how much they can lose from the trade and looks at it from a risk perspective side. I think a novice trader tends to sit by the screens, like glued to the screens, all excited because they're over leveraged. They show, very emotional, where a professional has all their risk calculated. They know where the market, where they expect the market to go, where they will take profit, where they'll stop out, how much they'll lose if they stop out, how much profit they'll make when they make. So they'll place the trade and only manage it where they need to. Where a new trader will often over-manage a trade, or every time the market moves, it's almost, what do I do now? What's happened? Or do I change something? So I just think it's more of a calculated approach from a professional, and I think the longer you've been doing it, the more it becomes second nature. Trading doesn't excite me. I don't get a buzz. I don't get all excited when I do well. I don't get overly down when I have a few trades which don't work. It's just about keeping in that neutral position, because I understand it's a long game. I understand, I'm not going to get every trade right, but it's very important to me that I stick to my principles, I stick to my setups, and over time, it tends to serve me well.
Nice.